Today, we're going to talk about the top 10 stocks on Robinhood, and our equity research friend is going to react to each one in less than 60 seconds. First on the list, worth $2.2 trillion, is Apple.
There's a story there of growing their service business with their new ecosystem. They're essentially entering a new business model. It's a really crowded trade, and I don't like the risk to reward. Apple's not as egregious. I wouldn't put my money in it because I think there's a lot of things that can go wrong.
Number 2 on the list, founded by the new richest person on the planet, Elon Musk, but also the most shorted stock in the US multiple times, Tesla.
So Tesla is really interesting. You're buying the story that Tesla is going to take over the world and issue this new age of electric vehicles. Their brand does have a lot of value, and you could say a lot of people already have Tesla cars. Tesla could be 700, 800, 900. You can include scenarios where, they capture a big part of the battery market. I just think it's incredibly risky to step in at these prices.
Number 3, we have another car company, Ford.
All the autos got hit super hard during Corona because no one's going to a dealership. I think all the autos took a super hard tumble. So I imagine it's just a deep value play. If COVID lifts, maybe there's more car buying.
Number 4, the manufacturer of a lot of things, General Electric.
Yeah, GE's kind of in the same boat. They also produce aircraft engines, and with all Boeing scandals and then the airlines being grounded and airlines not having money to buy new planes anymore, they got hit. Also, before there was problems with their pensions, they had to rewrite a lot of stuff, sell off a lot of their assets. I think they hit $6 at one point, so it's also another value play.
Number 5, probably having used a computer in your life, you would have heard of this company, Microsoft.
Yeah, well, I mean, Microsoft still has a really good story. It's a much higher margin business, right? You're talking about software, which is scalable, and they have a strong moat with the Office suite. And Microsoft Teams is competing with Slack. They have their cloud business grew like 40% or something last quarter. So it's a lot of growth there still.
Number 6, American Airlines.
I think this is just a play on the COVID trade. Like once COVID comes back, anything related to travel and tourism will start coming back a bit. Deep value play. What's interesting about airlines is they can actually be worth more than before the pandemic if certain things happen. They laid off a lot of pilots, forced a lot of them to go into early retirement. That cuts a lot of expenses. They cut down a lot of different flights. You could start to see consolidation within the airline business. And this was happening before a little bit, where basically you just reduce competition by merging together different airlines. So now they can charge a much higher price, and there's nothing consumers can do about it.
Number 7, another electric car company, this time from China, NIO.
Well, I mean, it's kind of like Tesla. It's an electric vehicle play. They manufacture in China. They're slightly cheaper than Tesla. And China is a really big electric vehicle market. There's like 4 or 5 different electric vehicle players. NIO is, I think, the most established one. They were one of the first car companies.
Number 8, if you shop online, definitely would have heard of this name, Amazon.
Amazon's another interesting story. A couple hedge funds really like the name still. Because people are forced to stay at home, it accelerated many trends. So, for example, Amazon, it forced people to start turning to e-commerce because you couldn't leave your house. They have their AWS business, which is the #1 cloud provider in the world. To me, it's still a little bit expensive, but they have a lot of tailwinds. They're investing in a lot of different projects, and then I guess a lot of people like Jeff Bezos and his management team.
Number 9, it all started out with the mouse. Here we have Disney.
Disney's an interesting story. During the pandemic, the stock was beaten down because all their parks closed. It forced people to look for other forms of entertainment. So instead of going to the movies, you would now watch everything online. The new story on Disney is Disney Plus. It's kind of like a Netflix competitor, except they have a lot more IP, like they have all their movies, a lot of series and other content that they produced over the years. And if COVID lifts, their parks are coming online and you'll see more revenue that way.
Number 10 on the list, the last one, another airline company, Delta Airlines.
I think just same as American Airlines. It's a deep value play. Um, Hopefully they can get some cash flow back.
These are the top 10 stocks being traded on Robinhood. Let us know what you think about these companies down in the comments section and whether or not you have them in your portfolio too.
Most of these seem like high beta, risky stocks. Just because of the pandemic, there's so much more retail trading. Like people are putting their stimulus checks into the market. And that's why some of these names are so popular. I kind of wrote that off initially because in my mind, it's very hard for a retail investor to move the markets. Funds move like billions or like 100 millions a day. And that compared to even a million retail investors, it's like equal or less for the retail investors. Like, it doesn't matter. But then there were a couple pieces that are just talking about options volume and the market makers for option. It's like when you buy an option, you're very leveraged, right? And what the market maker does is they have to hedge their exposure. So let's say they sell you a call, then they have to go into the market and buy that amount of calls to hedge their exposure. And just that force is also very strong. And there's an argument that retail investors are actually moving the markets by just buying